as the price slows down, you now have people calling for $60,000 Bitcoin. If you watch the market, yes, it's crazy for sure, but the market is going to be choppy. The whales are trying to sell their units, and for them to do that, they need to make sure you buy so that they can sell. Yeah? How do you identify these? On a macro, you understand a lot of people are now not searching for Bitcoin or cryptocurrencies in general. But now you look at the market and you're like, whoa, whoa, whoa. Yes, it is slowly starting to trend, but you do understand the fact that the price didn't drop to the support yet. So there is still a possibility that the price may drop down. Now, XRP coming back down another 30% would be great, but around 20% has higher odds. I mean, very higher odds. Now, you look at Bitcoin and its search history and its price action. You need to compare them. And while you do that, look for the total trends of 5 years, which shows I'm slowing a bit down. But then you also see in 2021, this was high and the bottom was here in Feb. Yeah. Now, remember, at that local bottom, that was the top of Bitcoin. Now, you can understand a basic fact. You just have to put the chart onto a 3-day or a weekly and then go back towards February. Now, you'll understand the negative divergence and that chart has a lot in common. Don't be confused. Just look at these dates and you will understand what I'm trying to illustrate here. This is early Feb, where you are getting the negative divergence confirmed. Fine. In Feb, you got the negative divergence confirmed in 2021. And also in Feb, you got the bottom of Google Trends. A lot of people didn't search about Bitcoin and they thought the price was going down. And then you saw the prices bouncing back. So the negative divergence was formed. Search was going lower and then the price bounced back. Now, when it bounced, how much did it bounce? That bounced 40%. Now remember, when it dropped, how much did it drop? 26%. Now let's take all of that from that past and put it into the present and see what may happen. Welcome to the Scientific Investor family, where the normal retail guys get to learn how to become the next top 10% of this world. Now, what's this? On a 5-year, it's going down, but now you need to zoom a little bit in, say last 1 week. It's been choppy in the price action. You need to agree on that. Now, the trend is showing it is slowing down. It is slowing down. It's slowly trending to the downside. So you actually take last 30 days and you see it's kind of, stable. It's not moving much. It's literally staying there at the bottom. So the question becomes like, okay, if there is no more new people coming into the market right now, what would open the doors for these whales to sell and to get out? For them to get out, they need to sell their units. And for them to be able to drop that into the market, they need a lot of new people coming in to buy that. Fine. Now, remove all of this and think. If the price action is dropping for Bitcoin below this range of 90,000, it is going to be a psychological warfare where people would actually drop. Retail will also sell, which may not be the best for whales. Yeah. So in that sense, what they may try here is to push the price up. Maybe I'm wrong, but they can actually try pushing the price back up, maybe close to the all-time highs, at least 105K, and then make another negative divergence, meaning they would jump back out and then drop it almost everything there. Now, there are two concerns which you need to be honest with yourself. The first drop here, as I showed you, is a 26% drop. You can see that. And that 26% happened very quickly. Now, the next drop up here, if you watch, that's a 28% drop. And you still push back up, saying, no, we are going back in, the price is going back up. But then, if you look at this particular drop, that's a 50% drop. So whales tried to lure as much as retail in and then dropped 50%. Imagine price of Bitcoin moving from 100,000 to 50,000 like boom. Yeah, and that's a 3-day chart, not a weekly, which means the number of days taken for such an action in the market is very low. 12 days and you dropped 50%. That was a panic move. Now, let me ask you this. Do you think they're about to drop it before everyone comes into the market? You need to look for the time horizon. Feb, no one was searching it. Then they pushed the price back up. Everyone started searching for it. You go back, you take the 5 years Google Trends, Bitcoin, and you'll be able to see the same. So the time frame you need to keep in your mind is here, Feb, the bottom, March, the top, and then late March, the next bottom, and the next top being in April. So keep those 3 times in your mind. And now look at this. Starting of Feb, they started slowing down and pushing back up, and a lot of people came in. Now, at the local top, it was Feb 20. A lot of people started searching for it, and the price was going back up. Now, look at the actual peak, which is close here around mid-March. So by mid-March, if you look at this, this is where you are. People were not searching for it. It topped out. It started slowing down. They pushed the price back up so that everyone would come back in and buy. Now, it won't get reflected after that in the trends. Why? It's not new people coming in. New people, FOMO in, they got crushed on short term, and then whales trap them. Now, you take the entire picture here into the current region, because I think it is important to look at this. One of the primary reasons for the price action, which I'm saying, is this. Now, you take this idea here, you got one 3-day candle close, which shows I'm kind of bullish than the previous candle. The previous candle had way more volume, but in selling, but failed to push the price lower. This particular candle has green volume, but was able to push the price above the previous candle's close, which is showing some good positive momentum, but it's short term. Because they have a negative divergence confirmed on a weekly, and there is a higher, very higher odds that the price may not actually breach the monthly here. If the monthly candle actually closes somewhere close here, what do you think is happening? We talked about this before, the monthly price action going up. So the price of Bitcoin starting to rally from that 70,000 mark, 50% above it, and still the RSI then barely making a high, which means negative divergence. Fine. So now you need a time horizon to look at this. Time, it's very hard to predict, and it's almost wrong all the time. But if you do look at a base idea, you are now trying to put the argument saying, okay, let's actually look at these support levels. Maybe we are going to come down drop to that particular level and then bounce off. Now, why would I say that? Because historically speaking, you do get two divergence. One from this corner to this corner. This is an example in Bitcoin, yeah? And then a micro divergence. You usually get that, yeah? In the market cycle, in the wave cycle, we are getting that. Now, if we take that equation and say Bitcoin is about to do that, how can we interpret XRP and its move? I would personally look for this and say, okay, the price did go up and now you have a lot of liquidity coming in, which means there is supply there. The price action is clearly showing you some supply is coming in at the bottom and it would like to drop. But again, for them, the whales, to be able to drop those units and to sell at the lower end, they may try pushing the price a bit up. Maybe it can become a fake out. So watch for a fake out in XRP. Meaning if the price actually bounces and reaches $2.5, most would assume that's a clear breakout. But I would argue this time around, they may try giving another fake out. So at least watch for the standard deviation here. The standard deviation is close to 2.6. So if the price is getting slowed down around 2.5, there is concern that it may drop back. And when it may drop heavily. Now, if you do understand that, there is a bigger possibility that the price action may come to the moving average and reach the moving average somewhere close to 1.8. Price is above the moving average, so moving average will still come up while the price is dropping. So it can drop somewhere close to 1.8. Now say you take Ether, it's still showing you on a macro leg, it can come down. But on a micro, why not retest this top and then come down? That is still possible. You saw this before. You drop, you retest, and then continue lower. Yeah, that is another possibility. So one way you can think about this is whales, they're trying to get more time to unload their units in this market. So you'll see a lot of mixed news showing they're buying, they're selling, they're buying, they're selling. Literally, they're doing that. But the information coming to you is at a different time. When they say they are selling, they already sold. Now they're preparing to buy. When they say they're buying, they already bought, they want to sell. So keep this in your mind. Now, when you take the total crypto market, I say this becomes a little bit more important for altcoin market. So we are first picking the total altcoin market here, excluding Ether for sure. And now you look at this. You do have a clear negative divergence, but the market is trying to argue the point that it would like to bounce off. Now, why? How much we'll have to see. But for the why, if it's me trying to look at the market and trying to answer that question, I would say, okay, the price action is now starting to show you it is making a local bottom with a clean structure. Yeah, you reached back down to touch that support. So if you look at it on a daily chart, you will actually see something like this, where the argument is actually clear. If you pick this from this bottom to this bottom, RSI dropped heavily, but the price action did not. That shows someone is interested in buying this asset on a higher time frame. And when you do follow the trend line here, you can put an argument easily like, we didn't bottom yet. We can come down a little bit more, not too much, but a little bit more in the RSI terms. So the RSI comes down to 53. I would say, okay, we're trying, fine. And then we may actually get a bounce. Now, on a monthly chart, you need to keep your eyes focused and clear here. if you get a monthly close with the negative divergence, that has a lot in negative. I don't want to see this, but it does not matter what I want to see. It matters what the market is doing. Now, on a volume profile, what you have to look on a textbook tier-based assessment is there's a lot of volume. I mean, in selling, yeah. Still, the price is not going lower. Your previous local high is the current high, and it makes a lot of sense to say you're getting that volume at the all-time high, which means a lot of people are considering this as a top and they are selling, but someone else is buying all of those. That's why even though all those units were sold into the market, it didn't go lower. Now, come back up and look at what we were doing in last cycle. While the price was still going up, you had a lot of slowdowns. Now, I think that has higher odds. Now, how can we understand that right now? The easy way is to have dry powder. The easy way is to understand the fact that there is going to be micro moves in the market following Bitcoin's direction. So you put a daily chart or at least a 4-hour chart, don't go lower than that, and put it on 2, which is Ranko chart, which shows you the momentum side of the equation and the price side. So Ranko, the RSI is showing it's starting to bounce off, which means it's trying to make a local bottom, but not confirmed yet. You need to see a green candle saying I'm making a local bottom. As of now, you don't. Now you go on a Heikin Ashi and you're like, okay, the momentum is not still in your favor. It's still red out here. So you haven't changed that movement in Bitcoin. So the pressure is still to the downside, yeah, in Bitcoin terms. Now on the price action terms, you can say the pattern which we are forming in Bitcoin may actually give you some room, which would make more sense with the fundamental macro micro, which means connecting the news that there's no much people there. And you just saw like, there's a lot of selling, a lot of buying happening by big guys. And the prices are down. I mean, if you go look at the crypto market right now, on a weekly or even a 30 days horizon, what you see is some of these assets are down 20, 30, 40%. So you go look at just last 1 month, and this is what you see. A lot of these assets are down 50%. I mean, they're not micro cap assets. Some of them are medium cap. Now we come into the high value assets, which are like the top 100. And you get to see most of them are 25 to 30% down on average in last 30 days. And if you pick them up in last quarter, you get to see they're still 25-30% down. It's not continually going down. Say some of these assets, it's down 19% for the quarter, but 30% for the month. So you now need to understand the trend. You now need to check for the negative divergence. Because while the Bitcoin dominance is trending lower, lower highs, yeah, lower low possibility increases. Now, if you visualize that, maybe I'm wrong again, but how can you see that? This is a possible structure. Now, it can happen in the 1, 2, 3 leg there to the downside, but the odds of that happening here is high, which means the price action is going to be beautiful. But while it happens on the initial phase, there is going to be exceptional volatility. Yeah. And I would only buy back XRP as I was saying before. Yeah. When I'm buying, I'll be informing you guys in the Patreon and in the Telegram. And as you guys can see, we are going through the Ask for TA session, covering as much as assets with negative divergence, because we know yesterday morning we posted charts in the same industry, same segment. Some showing negative divergence, some are not showing negative divergence, which means with the current bounce, they may do that, but for the current bonds, they do have some dry powder to push back up. So let's actually see how Bitcoin plays this local move. If it breaks this one, that can be one of the biggest fake outs. And I think that would be a time where we can call for $60,000. Now, when the actual break to the downside comes, I wouldn't say a $60,000. I would say maybe $3,000, maybe $2,000. That's still possible. Right now, it would look stupid to say that. Right now, it would look crazy. But when you're on a macro and you identify someone who has called the bottom and top, that would be a good sign to think about it. Think about the data pointing towards it and then make a decision. So if you want the help, be a part of the Scientific Investor family in here. Use the link, jump in, and make sure next few weeks you're not making the wrong decision. You're not now buying the assets with negative divergence for their micro bounces. If you're a spot rider, if you're a long-term buyer, that's not your purpose. You want to buy when they drop to a major support and when they don't have a negative divergence. Don't get this wrong, because I don't think the market is going to give you another opportunity in next 3-4 years. If you are riding an asset without negative divergence, I agree. I would also hold it. I would ride it until there's a negative divergence and then drop it, but not the opposite. Yeah. So guys, if you received value, smash that, Smash that like button. I'll meet you guys in the next video. Bye for now.